These are the two types of long-term care insurance that could protect everything you've worked your entire life to build, and choosing the wrong one could cost you hundreds of thousands of dollars. This is the honest comparison between traditional and hybrid long-term care insurance. And by the time we're done here, you'll know exactly which one makes more sense for your situation. Let's start with a number that should grab everyone's attention. If you're turning 65 this year, you've got almost a 70% chance of needing some type of long-term care before you die. 7 out of 10 people. That's not me trying to scare you. That comes straight from the Department of Health and Human Services. And the average person who needs care uses it for about 3 years. Here's what 3 years of care actually costs in 2025. A semi-private room in a nursing home runs about $315 a day, which works out to nearly $115,000 a year. A private room costs even more, at almost $128,000 annually. Assisted living communities have jumped to about $74,400 a year. That's a 10% increase just from last year. These costs keep climbing, and they're not slowing down. So the question isn't really whether you need long-term care insurance. The question is which kind you should get. Let me break down your two main options. Traditional long-term care insurance has been around since the 19th. It's a standalone policy where you pay annual premiums, and if you ever need help with basic activities like bathing, dressing, eating, or getting in and out of a chair, the policy covers your care. It can pay for home health aides, assisted living, or nursing home stays. Here's what it costs. According to the American Association for Long-Term Care Insurance, a 55-year-old man pays an average of about $2,200 a year. A 55-year-old woman pays roughly $3,750. Yes, women pay significantly more, about 40 to 50% more, because women file 2/3 of all long-term care claims and tend to need care for longer periods. If you wait until 65 to buy, that man's premium jumps to $3,280, and the woman's climbs to $5,290. The sweet spot for buying is between 55 and 65. For couples, there's a real advantage. A healthy couple, both age 55, can get a basic policy with a $165,000 benefit pool for a combined $2,080 a year. That's quite affordable for what you're getting. But traditional policies have a reputation problem, and it's well-deserved. Here's what happened. Back in the 1980s and 1990s, insurers priced these policies based on overly optimistic assumptions. They figured interest rates would stay high, people would let policies lapse, and claims would stay moderate. Every single one of those assumptions proved wrong. People lived longer, held onto their policies, and interest rates plummeted. Suddenly, insurers were staring at massive shortfalls. The result? Brutal premium increases. We're not talking 5 or 10% here. The National Association of Insurance Commissioners has reported rate spikes as high as 500%. Genworth, one of the biggest names in the industry, pushed through average increases of 97% in 2022 and another 51% in 2023. Many policyholders have watched cumulative increases of 150 to over 250%. That's the biggest risk with traditional policies. Your premiums aren't locked in, they can go up, and they have gone up dramatically. The other major drawback is what the industry calls use it or lose it. If you pay premiums for 20 or 30 years and never need long-term care, all that money vanishes. Your family gets nothing, and that reality has pushed a lot of people toward the second option. Hybrid long-term care insurance combines life insurance with long-term care benefits. If you need care, the policy pays for it. If you never need care, your beneficiaries receive a death benefit. If you change your mind entirely, many hybrid policies have a cash surrender value, meaning you can get some of your money back. You're never throwing money away, and that's the core appeal. Here's the cost difference, and it's significant. For a 55-year-old man, a hybrid policy with about $180,000 in long-term care benefits and a $120,000 death benefit costs roughly $3,540 a year, or you can pay a single lump sum of about $52,750. For a 55-year-old woman, it's about $3,265 a year, or a $54,000 lump sum. That's 2 to 4 times more expensive than traditional coverage for comparable long-term care benefits. As Jesse Sloan, the executive director of the American Association for Long-Term Care Insurance, puts it plainly, you can't get a product that does 2 things without charging more. Let me give you a real-world comparison that makes this crystal clear. A healthy couple, both age 62, could pay a combined $4,600 a year for traditional long-term care, insurance giving them each $257,000 in benefits by age 85. A comparable hybrid policy, providing each partner with $240,000 in long-term care benefits, plus a $160,000 death benefit each would cost that same couple $13,335 a year. That's nearly 3 times the cost for slightly less long-term care coverage. But hybrid policies have some powerful advantages. Your premiums are generally locked in and guaranteed, so no surprise rate increases, and the leverage can be remarkable. Setting aside $100,000 into a hybrid plan can create a guaranteed death benefit of roughly $190,000 to $200,000 for your heirs, while simultaneously providing up to $607,000 in long-term care benefits, all tax-free. There's a tax detail many people get wrong, and I want to make sure you understand this. Traditional long-term care insurance premiums are generally tax-deductible. Hybrid policy premiums usually aren't, because hybrid policies are built on a life insurance chassis with cash value. The base premium typically doesn't qualify for the deduction. Don't let anyone tell you otherwise. So who should choose which? Here's the straightforward guidance from financial experts. If your net worth is under $500,000 and long-term care coverage is your primary concern, traditional insurance likely gives you more robust coverage for less money. As Brandy Birch, CEO of Benefit Bay, says, traditional long-term care insurance is best for those who want dedicated, robust coverage for extended care needs later in life. If your net worth falls between $500,000 and $5 million, hybrid policies become very attractive. They fit into an estate planning strategy. They guarantee your money goes somewhere useful, and the locked-in premiums give you certainty. If you're above several $1 million, self-insuring, meaning simply paying for care out of your assets, becomes a viable option. There's one more thing I want you to know, and it's genuinely encouraging. The claims data shows that this insurance actually works. Insurers paid $16.8 billion in benefits in 2024 alone. Since the inception of long-term care insurance, total claims paid have exceeded $193 billion, helping over 1.8 million people. The largest providers now pay more than $18 million in benefits every single business day. The average claim is about $185,572. Some claims have been extraordinary, with one female policyholder receiving over $2.6 million in benefits over more than 15 years of care. And here's a detail that should give you some comfort. 67% of claims end due to the policyholder's death, not because benefits ran out. Only 13% of claims end because the benefit pool was exhausted, and 20% of claims end because the person actually recovered. The industry has also stabilized. Policies sold from 2011 onward have had stable premiums. The rate increase crisis primarily affects older policy series. Today's traditional policies are priced on much more realistic assumptions. Here's the bottom line. There is no single right answer. Traditional insurance gives you more long-term care coverage per dollar spent, but comes with the risk of premium increases and no return if you never use it. Hybrid insurance costs more, but eliminates both of those concerns by guaranteeing your money serves a purpose either way. The worst choice is no choice at all. Every day until 2030, 10,000 baby boomers turn 65. The number of Americans over 65 will grow from 58 million to 82 million by 2050. The need is real, the costs are rising, and the time to plan is now, not later. Talk to a qualified insurance professional who can show you quotes from multiple carriers. Get the numbers specific to your age, your health, and your financial situation. Because the goal here isn't just to have insurance. The goal is to protect your independence, your savings, and the people you love.